All right, let's get right into our financial market update. Today, we're digging into the key events from February 11th, 2026. And what we're really seeing is this fundamental tug of war playing out across the entire digital finance landscape. And trust me, it has some major implications for every investor out there.
So picture this. On one side, you've got groundbreaking innovation. You've got long-term conviction from builders and venture capital, the dreamers. But on the other side, you're slammed with the harsh realities of the public markets, the ones that demand results this quarter. And then you have the slow, grinding friction of regulation. This clash really gets to the heart of how we value new technology. So the big question today is, which of these powerful forces is truly in the driver's seat?
So here's our game plan. We'll kick things off with that powerful innovation story, the stuff that's pushing the industry forward. Then we'll flip the coin and look at the immediate headwinds coming from the markets and regulators. After that, we're going to zoom out to see how the bigger economic picture is playing a role, before we bring it all home and figure out what it all means for you, the investor.
All right, section 1. Let's start with the good news, right? Let's talk about the believers and the builders, the side of the story that points to a really robust future, no matter what the price says today. Okay, now this is a big one. It's not just what's happening, but who's involved. LayerZero Labs is launching a new blockchain specifically for institutions, and look who's backing them. Heavyweights like Citadel, Securities, and ARK Invest. I mean, when you see that kind of smart money moving in, it is a powerful, powerful signal that the long-term institutional adoption story is very much alive and kicking. And speaking of long-term belief, wow, it really doesn't get much clearer than this. Saylor from MicroStrategy is essentially saying he's ignoring all the short-term noise, stating that the company's strategy is just to buy and hold Bitcoin forever. That right there is the absolute epitome of conviction, especially in the face of all this volatility. And it's not just the diehards. A key player like Robinhood is also making moves that are clearly focused on the long game. Their stock price might be telling one story today, but what their engineering team is doing behind the scenes, well, that's a whole different narrative. And this is the proof in the pudding. They are rolling out their own Ethereum Layer 2 network, which just hit its public testnet phase. Now, for anyone who's not deep in the weeds on this, a Layer 2 is basically designed to make transactions way faster and way cheaper. This is a significant long-term investment in building out their crypto infrastructure. They're not doing this for this quarter's earnings report, they're building it for future growth. But as we all know, the market doesn't always reward long-term vision in the short term. So now, let's pivot to the other side of this conflict and look at those headwinds, that immediate friction that's coming from the markets and the regulators.
So, despite that amazing infrastructure development we just talked about, Wall Street's reaction to Robinhood's immediate performance was, well, let's just say, not positive. The market wanted growth now, not just the promise of it tomorrow. And there's the results, an 8% slide in the stock price. The trigger was their fourth quarter earnings report, which just missed growth expectations, and the company pointed directly to weakness in crypto trading volumes as a major reason why. So you see, the future tech just couldn't outweigh the present performance. And this wasn't just a Robinhood problem. This negative feeling was everywhere. The broader CoinDesk 20 index was down 2.5%. And get this, even the crypto miner Canaan saw its shares fall 7%, and that was after reporting its strongest quarter in 3 years. The headwinds were just simply too strong.
The regulatory environment is also sending some really conflicting signals. Over in the UK, we saw a clear win for the industry. The FCA officially registered the exchange blockchain.com. That's a great sign of regulatory acceptance. But at the very same time, another major exchange, Gemini, is packing up and leaving the UK market. It just highlights that all this uncertainty and friction are still very real.
And then you have the starkest reality of all, enforcement. The former CEO of SafeMoon was just sentenced to 8 years in prison for a multi-million-dollar investor fraud scheme. This is a really sobering reminder of the real-world risks and the fact that regulators are cracking down, and cracking down hard on bad actors.
Now, none of this is happening in a vacuum, right? Let's zoom out for a second and look at some of the wider macroeconomic trends that are shaping how investors and even consumers are behaving. Take this report from Goldman Sachs on India. In January, investors there bought more gold than stocks. That is a classic risk-off move, where capital just flows towards things that are perceived as safe. This kind of global sentiment creates a really difficult environment for riskier assets, including a lot of the tech and crypto innovations we've just been talking about.
And here's a fascinating trend from the consumer world. There's been a massive shift in American snacking, with meat snack consumption way up and popcorn sales down. And analysts are directly linking this to the rise of those GLP-1 weight loss drugs. It's a powerful example of how a single innovation, in this case a pharmaceutical one, can ripple out and totally reshape entire sectors. It's a reminder that market-moving disruptions can come from anywhere.
And finally, on the policy front, we're seeing another major potential shift. There are moves being announced to repeal an Obama-era greenhouse gas finding in the U.S. Now, this represents a significant deregulatory move. And for investors, this just adds another layer of uncertainty and potential volatility, impacting everything from energy markets to ESG-focused investment strategies.
So what do we do with all of this? All this conflicting information? How do we synthesize this tug-of-war between the promise of tomorrow and all the pressures of today?
At the end of the day, it all comes down to this core conflict. On one side, you have the visionaries, the Michael Saylors, the LayerZero labs backed by Citadel, the engineers at Robinhood building new infrastructure, and on the other side, you have the immediate, unavoidable realities of stock prices, earnings reports, regulatory hurdles, and even fraud prosecutions.
And that leaves us with the final question, the one every investor really has to answer for themselves. What do you weigh more heavily? Do you focus on the signal from the builders and the long-term believers, or do you react to all the noise and the friction of the current market? The answer to that question, well, that's likely going to define your strategy from here on out.